Is the 2021 housing bubble in Florida the biggest of all time? And more importantly, will the subsequent crash be even worse than the one that occurred in 2008? I mean, should you buy now or should you wait? Over the last few weeks, we've seen interest rates rise, and Zillow announced they will stop buying homes for the remainder of the year. Inflation is surging. Interest rates are starting to rise and rent is skyrocketing. So my question to you is, do you know when the best time to buy real estate is in order to capitalize on all of that? The answer is 10 years ago. Well, it's not too late. The ship hasn't exactly sailed yet. So today I want to cover the two main questions that everyone seems to have these days, which is number one, is the Florida real estate bubble about to pop? And then two, what impact will inflation have on affordability? I will answer both questions in today's video. So if you're a potential buyer right now or a real estate investor, it's never been more important to use data because the numbers don't lie. You must understand the real estate history in Florida in order to make the best decisions for yourself, for your family, and for your financial bottom line. September numbers were just released, and it's no surprise to anyone, we continue to see strong appreciation in Palm Beach County at 31% and in Broward County at 20%. And this is the trend in both counties. But the overall market has markets within the market. So different cities and different subdivisions within them are hotter and colder based on supply and demand. Recently, Goldman Sachs reported they expect to see another 16% appreciation in 2022. So what does it all mean? Now, first off, full disclosure, I'm not an analyst, I'm not an economist. Truth is, there is so much information out there right now and misinformation on YouTube. My first advice to you is to stop watching YouTubers pretend that they're qualified to analyze anything other than their YouTube channel. Now I can hear you already. Chris, you're a realtor, so anything that you're going to say has to be bullish because you want us to buy a house right now. And while yes, it's true, I am a realtor, my intent with this channel and this content is not to tell you when to buy or sell, it's to provide you with the best information so that you can make the best decisions for yourself. The reality is, it's always a good market for someone. So whether the market goes up, down, or sideways, there will always be someone for me to help. Now, obviously, I want the market to continue to appreciate, but market conditions are completely irrelevant to my production. I am far more interested in providing you with the best information so that you can do whatever is right for you, for your family, and for your financial bottom line. Right now, there's a massive shortage of homes to accommodate the demand of buyers who want to buy them. Period. End of story. It's basic supply and demand. What do you think about that, Tucker? Tucker wants you to buy a house. He doesn't care about your best interest. Now, we've been blessed to help 5 buyers just like you who found me on YouTube buy homes in Florida over the last 3 weeks. And while the next statement I'm about to make is anecdotal, it's not scientific, over the last month, I've had more people from California and New York call me to get them the hell out of wherever they're at and into Florida than at any other point since the pandemic started. They are desperate to escape Newsom and de Blasio, and they are desperate to be in Florida. Now, this isn't meant to be a political statement, it's just a statement of fact. I'm getting more reach outs from people just like you than ever right now. They want to live in Florida yesterday. Which reminds me, if you're enjoying this content and you find it helpful, please subscribe to the channel and hit the thumbs up button, like the content. More importantly, please leave a comment down below and ask a question, create some engagement. It tells YouTube to put the content in front of more people just like you who want to be in Florida too, and we want to help everybody. So the more you engage, the more people get to see it, and I want to thank you in advance for your cooperation. And if you're even thinking about making a move, please reach out to me as we can make everything so much easier for you. Call, text, DM, leave a comment down below, or just click the link above. And I always get this wrong. It's in one of these top corners, and we'll schedule a meeting right away. If we go bigger and look more macro, nationally, the real estate market is showing signs of uncertainty, and the market hates uncertainty. Uncertainty is never really good for any market. So I want to go back a little bit and look at July 2021 year-over-year home appreciation. And I go back to July because that's the last national data that I have. And what it shows is that home prices appreciated by 19.2%. CoreLogic is showing year-over-year appreciation at 18%. The S&P Case-Shiller Index is showing 19.7%. So this is incredible appreciation. 20% home appreciation is insane, and it's largely due to supply and demand. We simply have not had enough homes on the market for the demand from buyers. That causes prices to rise. So let's review a little bit deeper here and take a look at what this means across the country. This is our price appreciation map year over year for Q2 of 2021. And what you can see here is that the states in red have over 20% appreciation over the past year. And as a whole, it's 17.4% for the United States. But you can really dive deep here and see how it breaks down state by state. What we're starting to see is the forecast for going forward and what experts are projecting as we move forward. And that's where I really want to clarify the conversation because there's so much misinformation out there. I'm going to start with a quote from Ivy Zellman, who is a leading analyst. And she goes on to say closings are set to decline roughly 10% year over year in the second half of 2021. And home price appreciation is on the cusp of flipping to a decelerating trend. So what does that mean exactly? I think it's crucial to isolate the word deceleration for a moment and provide some clarity and context. When you see the word decelerating, you're likely going to think depreciation. But in spite of what you see on YouTube and what some quote unquote market experts are saying, the real experts, the real analysts are not projecting depreciation. What experts are projecting is an increased home price appreciation, just at a slower, more moderate rate. That's how deceleration comes into the conversation. And it's critical to understand the difference between depreciating and decelerating. It's a very different trend. And let me go deeper on that. This is the estimated home price performance taken from a recent home price expectation survey. And what we can see right here is that through the rest of 2021, prices are expected to increase. And they're expected to increase at roughly 11.7%. So that means appreciation. And while it's true, it's not as massive as what it's been over the past few years with 18, 19, almost 20% appreciation. It is appreciation. It's just a little bit more moderate than it's been throughout the rest of the year. And going forward, as we look into 2022, 2023, beyond, we're seeing continued appreciation, but again, at a more moderate pace. 5.82% for 2022 and so forth. So what that means is home prices are not expected to decline. They are expected to appreciate at a slower pace. So humor me, and I appreciate you watching this far. Let's drill that down a little bit further. This is the expected home value change. To be clear, this is coming from the same home price expectation survey by analysts. They're calling for 11.74% appreciation for 2021. And if we average that out over the next 5 years, as I just showed you from that last slide, the annual average through 2025 is expected to be somewhere around 5.7%. 5.7%. And if we put this into some type of historical context, that's far more normal than what we've seen recently. It's been 3.8% per year. That's the historical norm. But even that's bumped up to 4.1% due to the appreciation over the past year. So even the historical norm is climbing. Let's look more forward and go through 2025. Home prices are expected to appreciate cumulatively 31.8% if we add up the next 5 years. So home prices are definitely still rising. And again, this is due to supply and demand. It's not expected to decline anytime soon. What's really important here is that we help you understand that buying now, before home prices continue to accelerate, is critically important. So getting in while mortgage rates are still incredibly low is critical. We know that mortgage rates are ticking up. We know that home prices are expected to continue to rise. So buying now, if you can find a home, is really mission critical to long-term wealth building. And so as I mentioned before, if you could go back 10 years and do it again, would you buy another home? Because the values increased exponentially? Most people say yes, I'd love to buy a home again. In fact, I'd love to buy 2 or 3. Well, hindsight's 2020, and the only thing we have to fear right now is fear itself. And this is critical because home prices are not expected to depreciate. They are going to appreciate at a slower pace than they've done over the last year. More recently, home buyers are starting to see the slight rise in inventory and they're rushing back into the market. Now that's true on a national level. It's not so much true in Florida. But mortgage applications to purchase a home jumped 7% last week from the previous week, and that's the highest level since April of this year. And here's why, in my opinion. People are saying, hey, we want to get back in. We're starting to see some more inventory. We want to capitalize on the low interest rates. The truth is, home sales are very difficult to forecast right now. So this is the annualized home sales for 2019, 2020, and the green line is 2021. And what you'll notice here is that 2020 was nothing like a normal year, which we saw in 2019. So if we want to go back to a normal year, we've got to go back to 2019 and analyze what that looks like. Because we know what the pandemic brought. It brought out the orange line that you see on the screen, the dip down and the rise back up. In the second half of last year, when we packed in all this business in a very short amount of time after the lockdown, many people, because of the low interest rates and because they needed out of where they lived, all the other things that happened, rushed back into the market. It became a very abnormal year. Almost every realtor sold more homes last year than they've sold before, and it was due to that insane demand. Now let me break down why it seems like things are slowing down right now, because it may feel like that to a lot of people. And this is probably the best visual I can give as to why it seems that way. And please remember, the first half of this year, we talked about all those things we're going to see, from inventory to annualized home sales. There were so many things going up year over year because we were in lockdown. A lot of people took their homes off the market. Business slowed, the economy slowed, everything slowed down in the spring of 2020. And then this year, the spring of 2021, we were over all that because the lockdown was over. And we're about to enter a time in the later half of the reporting season, the end of summer, into fall and into winter. We packed a ton of business and we're going to be below that orange line. And because of that, people are starting to feel like we're down year over year. You've got to be aware of the reality of the situation that we're heading into. The reality is we're beating 2019, which was a very, very good year in real estate. And also the last normal year that we can look at and analyze. And you'll see right here where when I isolate 2019 and 2021 here on the screen, you can see right where we're at. And so the reality is we saw 2019 being one of the best years in the last 10 years in real estate, and we're ahead of that right now. Now this is a look at existing home sales going all the way back to 2012. And you can see it right here. 2019 was the best year except for 2017. That one year was a little bit better in existing home sales. But by and large, we're doing very good. So if we take these things back to where we were just a minute ago, home sales are very difficult to forecast because forecasters don't know what's going to happen. We're going to come through here and level out or be in the middle of where we were in 2020 and above where we were in 2019. And fairly soon, we're going to see people say, hey, we're ahead of where we were in 2019. But the other half of people are going to say, we're down year over year. And the market hates confusion. The truth is, there was so much activity that happened last year, we're absolutely going to be below that level. No doubt about it. But we're going to be significantly ahead of a very normal year in 2019. And that's the real quandary that we're in right now with these forecasters. They don't know what to expect because these things have been so unusual for the last few years. One thing I think we really must look at if you want to know where the future of the real estate market is going to be, is we want to look at active listings. And this is a look at active monthly listing counts from 2017, 2018, and 2019. Now remember, 2019 was the last normal year that we saw, so it's good to have that contextual reference. We're going back 3 years. And what typically happens on a national level is listings peak sometime in the fall and then drop off, and we repeat the cycle again. You can see over the last 3 years, before we got into the pandemic, 2017, 2018, 2019, listings peaked in the fall, and then they drop off before we start over in the new year. We know after 2019, we had 2020. In 2020, the monthly listing counts peaked in April. Peaked and everybody rushed back in and we started to see dwindling listings all over the country. And this sets up the challenge moving forward. The challenge moving forward has always been closing the gap as those listings dropped and sales shot right up. Now, the big question is, when will listings peak this year? We troughed out here in the front part of the year, less listings on the market than we've ever seen. The question now is, when will they peak? And there are 3 scenarios to this in my opinion. First one is they will continue to grow and we're going to eclipse where we were in 2020. And that will give us a little bit of relief in the frenzy of the market that we're feeling right now and a little bit of pricing relief. Second option is that we flatten out and we continue on there and probably intersect where we were in 2020 at some point. And then the third option is listings peak and begin to dwindle. If the third option happens, this is where you see more price appreciation. It's upward pressure on prices, and that will be the story. Now, I think there are 3 good reasons why we will continue to see listings increase as we go into the fall. First of all, you've got pent-up seller demand. There's no doubt that anybody who owns a home is thinking about selling right now with the market the way it is. And homeowners are a lot more comfortable putting their home on the market. People are starting to get back to the stage where they feel comfortable from a health perspective doing that. Number 2 is new construction is completely taking off. Nationally, but here in South Florida, it's exploded. And the fact is, in South Florida, there's no more land to build on. So any parcel of land that a builder can develop, they are developing because they clearly see the opportunity to build as much as they can. Now, this past year, they've had a lot of headwinds in front of them with material costs, specifically lumber, and all the other things they need to build a home outside of the lumber, the labor costs, the labor shortages. All of those have produced tremendous headwinds for builders, but they're starting to turn the corner and build and see the opportunity in this market. Again, in South Florida, they see it clearly and they're building everywhere. But nationally, that's starting to really get some momentum. And the third reason is the end of forbearance. It's going to create new listings. I don't believe it's going to create this incredible wave of foreclosures, but it will absolutely create a time in the market for people to evaluate where they're at. Can they afford the home any longer? Or are they going to put the home on the market? So I think there's a lot of reasons right now that we're going to see the listing number continue to rise or begin to climb. At the end of the day, we've got to watch that number closely because that will be the predicator as to what's going to happen in the market. We have to watch listings. The value of homes today has increased equity in so many people's homes, and all of them are saying we may need to take advantage of the equity and move, upsize, downsize, or whatever the case may be for themselves and for their family and their financial bottom line. But almost every homeowner is sitting on a ton of equity. So they're not going into foreclosure, they're going on the market and they're tapping that number. And despite what some talking heads say and some of the YouTube analysts say, that's the situation that we're in right now as we go into the fourth quarter and trying to forecast the fourth quarter and next year. It's all about listings. Now, the other big story that you have to be aware of right now is interest rates. No doubt that we're starting to see some movement in interest rates for a lot of different reasons. Now, I'm not here to say that the sky is falling and Chicken Little should be afraid.
The sky is falling! The sky is falling!
Interest rates are going up, but they're not going to shoot through the roof. But it's critical to understand what interest rates are doing so that you can be educated on this topic. Now, I'm going to start with a quote from Ali Wolf, who is an analyst, and I quote, "The single biggest risk to housing is rising mortgage rates." And that's a real possibility as we go into next year, and that could possibly bring prices down. Furthermore, other economic, financial, and confidence challenges could also result in a drop or flattening of home prices. But to be very clear, a drop or flattening in the home prices is a far cry from the crash that we saw during the Great Recession. So the biggest issue, according to analysts, is the rising interest rates. The truth is, it's going to be more expensive for people to borrow. Right now, the 30-year fixed just jumped over 3%. And historically, it's kind of crazy that we're talking about a rising interest rate environment when we have an average 30-year fixed at just over 3%. 3%. I got to go back and talk to my parents, but I'm almost positive my parents' first home they bought was an interest rate of 17 or 20 something percent. It was insanely high. We're talking about 3%. You can see right here, 3.01% as recorded by Freddie Mac on their weekly survey. And the reason we saw the jump is that the Fed indicated they're starting to taper, or they're going to taper soon. So basically, the Fed came out and said, you know, we've been buying mortgage-backed securities, and now we're going to start to taper that. We're going to start to pull back on that. We're going to do that sometime coming up. Well, the market prices that in instantly. So the issue right here is the economy is recovering. It's just not recovering as quickly as what they would like to see. But the Fed saying we're going to start tapering on what we're buying in the mortgage market had an impact. It caused interest rates to go up. But I think it's important to realize we are in a great environment right now. It will cost more to buy as homes appreciate going into next year and as interest rates rise going into next year. But to be clear, nobody's calling for a sharp spike in rates. Here are the latest projection in interest rates from Fannie, Freddie, MBA, and NAR. And you can see somewhere around the middle to the third quarter of next year, it being forecasted at around 3.5%. Right now, we're at about 3%, so you can see the drop in rates through the pandemic starting to inch up. Freddie Mac's saying in the third quarter, it's going to be around 3.7%. Now, the truth is, I'm not a financial analyst. I don't know. This is where we're at today, and this is where they say we're going to be. I don't think it's going to be at 4%, and it's probably also not going to be at 3.25%. It will likely be somewhere in the middle. Let's call it 3.5%. But again, it could be a little bit more or a little bit less than that. But there's no doubt interest rates are going to rise. In this example here, I've got a $400,000 loan that somebody may obtain to buy a house. And if they look at 2.75%, which is where we've been at for quite a while now, that payment is about $1,600. Now, if we go up to 3%, it's $1,686. And if interest rates go up in next year and start to knock on 4%, that rate allows you to buy a lot less home. Now, truthfully, I don't want to convince anything that they don't want to do. What I want to illustrate is that as prices rise and as interest rates rise, it's going to cost a lot more in the long run to buy a home, and certainly to finance that home. Homeownership is one of the fundamental keys to accumulating wealth in America, which is why it's been integrally linked to achieving the American dream. And the truth is, a home is a very effective hedge against inflation because you've got a fixed payment as opposed to rent, which rises, which gives a homeowner an enormous advantage over renters when it comes to accumulating wealth. But the main question that people have right now with interest rates rising and prices going up, there are many people out there saying, you know what? I don't want to buy a house right now because I refuse to buy at the top of the market. But what's not considered in that analysis is that forecasters are not calling for depreciation in the market. Now, there may be deceleration, meaning it's unlikely that we're going to stay at the same level of appreciation that we're at right now at 20% or 30%. We're going to see less appreciation, but not depreciation. So if you look at a $350,000 home over the next 5 years, the buyer of that home stands to gain just over $111,000 in gained equity based on the forecasted appreciation over the next 5 years. So if you're frozen or paralyzed by fear and thinking, why would I buy at the top of the market? You're missing that main piece. And that fundamental truth is a game changer. But right now, the bottom line is this: homes across the country are underbuilt or undersupplied. That's not going to be fixed overnight. So to answer the question that I started this video with, is the market going to collapse? The truth is, I don't see it happening anytime soon. Are you finding this content to be useful? Please let me know in the comments down below. I hope you enjoyed my video. And if you did, please give it a thumbs up and smash the notification bell. Are you thinking about moving to Florida? Please let me know in the comments. We love living in Florida and suspect that you will too. But the truth is, demand is so high and inventory is so low that if you want to live here, you must contact me immediately. Homes go very fast. There is no time to waste. As a local expert, I typically know what's coming on the market before it even hits the MLS. And once it does, it's typically way too late to get involved. For the last few years, we've helped hundreds of people buy and sell homes right here in South Florida, and we absolutely love it. As 40-year Florida residents, we know all the best places to fit your desired lifestyle and budget. So if you're even thinking about moving to South Florida, Palm Beach County, Broward County, or really anywhere, you've got to reach out to me. Call, text, DM, send a carrier pigeon, a smoke signal, by any means necessary, because we've got your back when it comes to moving to or living in South Florida. And until next time,